is. Woolies and Lowe's are still trying to sort out who's going to be the final valuer to value their respective interests in the joint venture so that one can buy the other out. It's expected at the moment that Woolies will take Lowe's out and then deal with selling or disposing of each of Masters and HTH. There's a number of people, quite a number of people looking at HTH and Masters or different components of the same. Anchorage Capital Partners, who are the people that bought Dick Smith out and then flogged it off to the public and cost all the poor investors a fortune, but they did very nicely, thank you very much. They're having a look at it. I think they're being advised by Jeff Dart, who a lot of you will know as an industry advisor and commentator, and he's spoken at these venues before for us. M10, it's not clear whether they're looking at all or only part of HTH. The ACCC has written to a bunch of industry participants seeking their views on the effects of a merger, and the interesting, relevant part of the way that approach and the focus of the ACCC is they appear to be focused on the market for wholesale distribution, which is what I would have thought was the logical one to look at. Because obviously, were these businesses to merge, then independent suppliers and independent hardware stores go from having two large independent wholesalers down to having one large independent wholesaler, and that appears to be the issue that the ACCC is focusing on. There are also various parties suggesting that M10 don't want all of the HTH business, but I can't shed any light on that. As you probably all know, earlier in the year, Hydrox Holdings, or should I say the HTH, the old Danks management, announced that they were ceasing to market the Plants Plus brand, although they were leaving that brand in the marketplace for a unknown period of time, but they weren't undertaking any marketing activity. So just musing about it all, I mean, all the different combination of possibilities, none of which we know will happen or which may happen. You know, is there a possibility that Lowe's might take Masters out of the joint venture? You know, they've got an international business. They just recently bought a big or reasonable sized business in Canada. And interestingly, in Canada they have acquired a bit of a relationship with Ace Hardware, because the business they bought in Canada has the marketing rights to use Ace Canada, the Ace Canada name in Canada. Could Ace Hardware be interested in the HTH business or the Mitre 10 business, or both? You know, Ace Hardware now operate in, I'm not sure, don't quote me, but you know, at least a dozen countries. They have a significant purchasing network out of China to feed their very successful US network of stores and their international operations. So are they in the mix? It's interesting to note that Ace Hardware ran the ruler over Mitre 10 when Mitre 10 was having all those difficulties that when Metcash ended up acquiring them all those years ago. And it was very interesting to note that the CEO of Ace Hardware was a keynote speaker at the recent Mitre 10 conference. So, you know, interesting times. I read somewhere the other day that when Woolworths deal with Hydrox Holdings, it should add about 5% to their bottom line in terms of overall profit of the group. So, interesting times. Who knows what will happen? Metcash Mitre 10, you can't get any numbers because they don't segment below putting hardware and automotive together. So you can't get the separate hardware numbers very easily. You can see a little bit of growth there between 2014 and 2015 in the combined hardware automotive business. You know, questions to think about. If they do acquire all or part of HTH, you know, might they then sell that combined hardware division once they rationalise it and improve it and presumably cut some costs out of it, particularly on the distribution side? Might they then sell it all? I mean, after all, they did sell one of their most profitable businesses recently, which is the automotive division, in order to help fix up their balance sheet so that they could concentrate on their IGA business, which, as we all know, has been under very, very significant pressure from Woolies and Coles and Aldi. As I said to you, the ACCC is making those industry inquiries. I also understand from some of the DANCs, the HTH stores, that HTH have also sent some form of communication out seeking their stores or inviting their stores to express an opinion about the whole thing. I can only imagine that that's something that's been directed by the ACCC without understanding it. But I think what's clear is that a possible rationalisation of the wholesaling industry down to only one major independent wholesaler, I mean there are lots of small ones, but in terms of one major national with significant product line, is going to have some real implications for the independent retailers of Australia that need a warehouse to support them. But also I would think there'd be a lot of suppliers who are wondering what that means for their future as well. So as the Chinese curse goes, may you live in interesting times. Over at Bunnings, the great machine just keeps going. So this is Q3 2016 versus 2015. All the numbers just keep going up. And the like-for-like sale growth is still there at 8.3%. It's an amazingly good business. No question in my mind that in some categories particularly, I know Matt Hames is here today. If you talk to him about paint shares, all the independents have seen their paint share drop and the big green box's share of the national paint market steadily increase. And in my view, there are some other categories where particularly independent DIY as opposed to trade stores continue to lose some business to Bunnings. Betty Tando's here. If you don't get her HNN weekly newsletter, get it. And she's recently written two very long, and in my view, really excellent articles about Bunnings, backgrounding them, and I can only commend them to you. It's an excellent source of timely information to add to the other industry participants. From our perspective, the way we see it and talking to stores, Mitre 10's increasingly disciplined approach to their franchisees that is requiring a greater level, on an ongoing basis, continuing to demand greater compliance with the buying that they want to see happen, has been causing some unrest. At their recent trade conference, they made an announcement regarding fastener supplies and who they saw as their preferred fastener suppliers. And I know that there were a lot of Mitre 10 stores not necessarily happy about the decision that had been made, and that doesn't reflect on any of the suppliers involved. It reflects more the way in which, I guess, Mitre 10 went about it and what they're demanding from their franchisees. Because of HTH, we think that level of unrest that we hear from Mitre 10 stores, that's an opportunity for us. HTH's uncertain future, anything that's uncertain we think creates an opportunity for us. A possible merger of HTH and Mitre 10 will make some people unhappy, because some people are always unhappy when you change things, and we think that creates opportunity for us. So we're pretty happy at the moment. Our industrial and tool division, which has grown very, very strongly over the last 2 to 3 years. In that marketplace, we see Total Tools is becoming increasingly aggressive, and for the guys in that specialist space, they probably focus on Total Tools the way that traditional hardware stores might be concerned about Bunnings. And Total Tools have been very aggressive in the marketplace. There are way too many buying groups in this industrial and tool space, and you can only think that over time that number of groups will rationalise. That equals an opportunity for us. Our group, ITT, is now unequivocally the largest of the independent groups by membership numbers, by a long shot, having come from nowhere in a bit over 2 years. that's really all I had to say about industry this year.